You're joining Property Tribes TV, where we are talking inheritance tax, and I'm joined by our tax partner, Rental Income Tax Advisors, RITA for short, and joining me here is Janice Parker from RITA. So welcome, Janice.
Thank you.
Now, inheritance tax, very interesting topic because a lot of people put off thinking about it. What's your advice of when is the best time to start thinking about inheritance tax?
Well, I think if you are focused towards building up wealth to pass on to future generations or for your own retirement, then I don't think you can start too soon, because most people leave it too late when there's nothing we can do for them to try and mitigate their inheritance tax liabilities. So I think once you've actually got a couple of properties under your belt, then maybe you should be starting to consider the inheritance tax implications of this and what you can be doing to mitigate those tax liabilities.
Quite. And would another indicator be when your children are perhaps over 18 and, you know, they've left home, and would that be another good sort of trigger point to start thinking about it?
Absolutely, because the best way of mitigating inheritance tax liabilities is to give as much of your assets away as you can afford to without actually affecting your lifestyle and what you want out of life. So when you can actually afford to start giving your assets away, the unfortunate thing is that where minor children are concerned, i.e. children under 18, any income generated by those assets is still treated as your income, so you are still taxed on that income, whereas it is much better if it can be taxed on the children, because that saves income tax as well as inheritance tax. So once your children get to 18, or your youngest child gets to 18 if you've got more than one, then start thinking about it, because there are things you can put in place to make sure that as much as you have earned in your life, built up in your life, can be passed on to your next generation without too much tax going to HM revenue and customs.
Well, quite, because people put so much effort into building their portfolios, and many people do it to leave a legacy to future generations. But as you've said previously, they wait until the last minute, perhaps till they're in their 80s, to actually think about tax planning. And as you said, by then it's too late. So really, the sooner that they think about it, the more you can do to help.
Yes, absolutely, because what people have to realise that if they do want to give away assets, they've got to survive that gift by 7 years before the value of the asset falls out of their estate for inheritance tax purposes, which means that those of an older generation have got very little scope. There are things that can be done, but they tend to be a bit more risky than just being able to give your assets away. A bit more complicated. So really, the sooner you start, the better it will be. And don't leave it too late.